Hey Bitcoiners, welcome back to Edge 21, your go-to channel for trending Bitcoin news, updates, and insights. Today we're diving into the incredible story of MicroStrategy, Michael Saylor's visionary leadership, and how Bitcoin is reshaping the company's future. From skyrocketing stock premiums to jaw-dropping Bitcoin reserves, MicroStrategy is a case study in bold strategy and financial innovation. Is Bitcoin really the future of corporate treasuries? And how does MicroStrategy stack up against holding Bitcoin outright? Stick around for insights, numbers, and the big picture. Hit that subscribe button and let's dive in. Let's start with the man at the center of this transformation, Michael Saylor. Known for his disciplined and ambitious vision, Saylor started as a Bitcoin skeptic. Back in 2013, he tweeted that Bitcoin's days were numbered. But fast forward to today, and he's become one of its most vocal advocates, calling it the hardest asset on the planet. So, what caused this complete 180-degree shift? His deep dive into Austrian economics and the decay of fiat currencies brought him down the Bitcoin rabbit hole. Now, Bitcoin isn't just an asset to him, it's the cornerstone of his company's strategy. Since August 2020, MicroStrategy has purchased a staggering 331,200 Bitcoin, with an average acquisition price of about $39,292 per Bitcoin. Let's put that in perspective. With Bitcoin currently trading around $90,000, their holdings are now worth over $30 billion. That's more than triple their total investment of $9.91 billion. And they're not stopping anytime soon. In fact, in 2024 alone, the company spent over $4 billion to add 63,070 BTC to its reserves. They're doubling down on their Bitcoin first philosophy, showing an unwavering commitment to this long-term strategy. But the most ambitious move yet is their newly announced 21-21 plan. Revealed on October 30, MicroStrategy plans to raise an astonishing $42 billion over the next 3 years to further bolster their Bitcoin holdings. The strategy is split between $21 billion in equity and $21 billion in fixed income securities. If fully realized, this plan could enable them to acquire over 400,000 additional Bitcoin at today's prices, equivalent to more than 2% of Bitcoin's total supply. This bold move isn't just unprecedented for a public company, it has the potential to propel MicroStrategy ahead of not only other corporations, but even some countries in Bitcoin ownership. So, how does MicroStrategy afford this aggressive Bitcoin buying spree? Here's where things get fascinating. They've used a mix of debt and equity financing. For example, back in 2020, they raised $650 million through convertible notes. And in 2024, they issued $2 billion in new shares. Altogether, their outstanding shares have increased by 103% since 2020. While share dilution can scare off investors, Michael Saylor argues it's strategic. Why? Because the value of Bitcoin per share has grown 59% since their first purchase, meaning each share now represents more Bitcoin than ever before. With the 21-21 plan on the horizon, the company's funding strategy is about to go to an entirely new level. If executed successfully, this plan would redefine how corporations approach treasury assets and could potentially set a new standard for using Bitcoin as a financial foundation. Let's talk about MicroStrategy's stock, ticker symbol MSTR. Before Bitcoin entered the picture, MicroStrategy was just another niche software company with inconsistent earnings. Their average earnings per share, or EPS, from 2010 to 2019 was just $3.94. But since pivoting to Bitcoin, the stock has been completely transformed. MicroStrategy stock now trades at an average premium of over 15%, largely due to its Bitcoin holdings. What's interesting is how closely the stock correlates with Bitcoin's price. Before their Bitcoin purchases, the Pearson correlation coefficient between MSTR stock and Bitcoin was negative 0.658, meaning they moved in opposite directions. Now, it's a strong positive correlation of 0.883, meaning MSTR moves almost in lockstep with Bitcoin. Here's the kicker. When Bitcoin's price rises, MicroStrategy often outperforms due to a Bitcoin stock multiplier effect. For example, during Bitcoin's run to 65,000, MicroStrategy's stock price rose nearly 400%. So here's the big question. Is investing in MicroStrategy stock better than holding Bitcoin directly? The answer isn't black and white. Holding Bitcoin gives you direct exposure to the asset without the risks of company operations, share dilution, or debt. But MicroStrategy offers something unique. It's like a Bitcoin ETF with benefits. MicroStrategy combines its massive Bitcoin reserves with a core software business that provides additional revenue streams. For many institutional investors, or those restricted from buying Bitcoin directly, MSTR offers a regulated way to gain Bitcoin exposure safely. That's part of why investors are willing to pay that premium. So, what does the future hold for MicroStrategy? Analysts predict the company could hold between 370,000 and 514,000 Bitcoin by 2032, depending on market conditions. Now, let's tie that to Bitcoin's potential price. If Bitcoin reaches $1 million per coin, a number some forecasts suggest, MicroStrategy's Bitcoin holdings alone would be worth over $500 billion. That would catapult the company into the ranks of the top 15 US corporations, alongside tech giants like Apple and Microsoft. And with the 21-21 plan in play, the potential upside is enormous. If MicroStrategy successfully executes this plan, their Bitcoin holdings could surpass 900,000 BTC by the end of 2032, securing their place as the largest Bitcoin holder on the planet. But Saylor's vision doesn't stop there. He sees Bitcoin as more than just a reserve asset. It's pristine collateral. Imagine a future where Bitcoin-backed loans fuel corporate expansions or even national economies. This isn't just speculation. It's a trajectory Saylor firmly believes in. Of course, this bold strategy isn't without its risks. Critics argue that MicroStrategy's heavy reliance on Bitcoin leaves it vulnerable to extreme price volatility. In 2022, the company reported impairment losses of $1.47 billion due to Bitcoin's price decline. And if Bitcoin were to face severe regulatory hurdles or prolonged downturns, the financial strain on MicroStrategy could be significant. But Saylor remains unfazed, often saying that Bitcoin's volatility is a feature, not a bug. He argues that Bitcoin rewards patience and that its long-term trajectory will outpace any short-term dips. MicroStrategy isn't just betting on Bitcoin. It's paving the way for corporate adoption. By integrating Bitcoin into its balance sheet and leveraging innovative financial strategies, the company has become a trailblazer. With institutional adoption of Bitcoin growing and ETFs gaining traction, Saylor's vision of Bitcoin as the world's reserve asset feels more plausible by the day. What's truly fascinating is how MicroStrategy amplifies Bitcoin's value. It's not just about holding Bitcoin, it's about using it as a foundation for financial innovation. In doing so, MicroStrategy has positioned itself as a unique hybrid of Bitcoin and traditional finance. And that's a wrap for today's deep dive into MicroStrategy, Michael Saylor, and their groundbreaking Bitcoin strategy. What do you think? Bold genius or risky gamble? Let us know in the comments below. Don't forget to like, subscribe, and share this video to keep the conversation going. This is Edge21, your hub for Bitcoin updates and financial insights. Until next time, stay strong and hodl on.